U.S. majors, though, continuing to push higher despite that big uptick that we're seeing in coronavirus cases, not just in the U.S., but worldwide. Global cases of coronavirus topping 9 million today, a day after the WHO reported the largest one-day increase in infections worldwide. U.S. accounts for about 20% of new cases globally. But some good news for those of us here in New York City today as we enter phase 2 of the reopening. That means, yes, outdoor dining is now available. Retail stores operating with reduced capacity. We're going to get to much more of that a little later in the show. But let's kick things off for this hour with Jeffrey Kleintop. He is the Chief Global Investment Strategist at Charles Schwab. Jeffrey, it's always good to talk to you. You know, it's interesting because we've been looking at the economic data that's been coming in relatively better than expected. When you look at where we are in terms of the recovery process, how are you viewing the pace of the economic recovery we're seeing right now?
Well, so far, I think it's been about as good as you could hope for, V-shaped in many countries. We're seeing things like a manufacturing and service sector recovery, even retail shopping around the world. You could see it in Italy, Germany, France, and in Japan, really coming back online. The question is, what's the pace of it going forward? We obviously expected some pent-up demand as businesses reopened and people went back to work. But what does it look like going forward as we go through the remainder of the summer? We might get a glimpse of that, or might have just gotten a glimpse of that in terms of the box office numbers. So we've actually started to see cinemas begin to open up around the world, notably in Italy and Germany, a few other places. And they did not show any kind of a V-shaped rebound, which might mean there's a limit to how willing people are to interact with each other again. So sure, it might be okay to open some stores, maybe go back to work on a rotating basis, but people still seem to be cautious when it comes back to gathering in large groups for an extended period of time. And that could mean big parts of the economy tied to that, the entertainment industry, travel, restaurants might be slower to recover from here. And since that's the next wave of the recovery, things might slow.
Yeah, it's interesting you point out the numbers for cinemas, because we've got sort of the official economic data that we're watching, but also at the same time, the number of restaurant bookings that are going up, the number of passengers that are going through TSA checkpoints. It's sort of an indicator of how much activity is picking up. I mean, you seem to suggest that there's only so much pent-up demand that can drive things even higher. How does this momentum keep going?
That's a great question. And I don't think it does. I think we begin to slow. And maybe we'll see that starting tomorrow with the PMIs. We're going to get the purchasing managers indices, the preliminary ones for June. What a huge jump back in May from April, but now we're going to get the June data. And while I do think we'll see some improvement, it may not be at the same pace that we saw last month. And that slower pace going forward may begin to favor less deep cyclical areas of the market. The best performing sector off of the lows has been energy, a pretty deep cyclical on the recovery. But it may not be defensives that kind of rule the market from here, or those deep cyclicals. It might be something in between, sectors that can do okay in a slower growth environment, like the financial sector, which has actually shown some signs of outperformance here in the last month.
Are you taking this opportunity right now to maybe reposition yourself in the market?
We are. So we're looking at our sector allocation. We've just made some shifts. So we've gone overweight the financial sector, given in part some of the things I just mentioned, but a longer term rotation more towards value stocks, we think, in this cycle versus the growth stocks that drove the last cycle, and underweighting more defensive areas of the market like utilities. It's doing well today. I think some of that is just noise. I think that's an area that, even though it's defensive, it's become so precious and so overvalued. I think even if we were to see another recession, it'd be hard pressed to see strong outperformance by the utilities sector. So a little rotation there, a little bit more of a cyclical orientation, but one more towards a slow economic recovery rather than the more rapid one we've seen off of the lows.
Jeffrey, we've heard from so many of our guests who say it's the stimulus that is driving the market higher. Part of that is the federal government stimulus. Part of it is the Fed's moves as well. We heard from economic advisor Larry Kudlow today saying that additional stimulus is highly likely, but not until after July. And that's likely to focus on businesses instead of individuals. President Trump separately saying that there will be another bipartisan stimulus package. But looking at the timing of this and what could potentially be the focus on businesses, what does that suggest in terms of how this is likely to push the market higher? Because yes, the businesses and the PPP loans have certainly helped a lot of businesses, but we're also seeing individuals who still have not found employment, and those checks run out.
Right. Stimulus, you're right, has been a big part of what's been driving the markets as well. And hope that that's going to bridge the gap and mitigate the unemployment that would have, how much worse it would have gotten, or how many bankruptcies would have been in place. But I think it's wishful thinking on the part of Larry Kudlow and maybe the Trump administration to think they might get more done later this year. Very divided partisan environment. I think the priorities of the Trump administration differ dramatically from the priorities of the Democrats. And I don't think we'll see another round of stimulus in the U.S. Very different focus in terms of where that stimulus might go, unlikely to come together. And as a result of that, I think probably more fruitful moves towards additional stimulus might come out of Europe. There are meetings this week that are likely extended to next week on bringing further stimulus there that might match or even rival what we've seen to date in the U.S. That could be more of the stimulus story in this summer.
And Jeffrey, very quickly on that note, with the stimulus coming out of Europe, are you looking at more opportunities in European equities? What are some things that you think maybe investors should be looking at, keeping in mind the additional stimulus that is now coming?
Right. Yeah, I'm excited about that story. I think finally getting more fiscal stimulus in place there is encouraging, and that could help to lift those markets. They're already further into their COVID recoveries than what we're seeing elsewhere. And, I think one of the areas we've seen a brighter spot in the markets in the last month or so has been international stock outperformance coming off of these low valuations. I think that's an important story, and one that may play out this cycle, as we often see a rotation between U.S. and international outperformance by cycle would suggest this cycle is favorable for international equity. So we really think that's an area many investors might be underweight in their portfolio they should consider adding to here.
Okay, Jeffrey Kleintop, Chief Global Investment Strategist at Charles Schwab. Some good takeaways there. Thanks so much.
Thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.